I'm Randy Wilburn, Director of Education at Zweig Group. Welcome to our online ZLearning course, How You Can Be a Better Financial Manager, Project Financial Management from A to Z. This one-hour continuing education program will help you to develop and strengthen your financial and accounting skills. You may not end up taking over for your CFO or controller, but you will be able to have a conversation with them and begin to understand what they are talking about and how it relates to the projects that you are working on or managing. Our guest today is Robert McCauley, a consultant here at Zweig Group and a financial and accounting specialist, and our own Claire Kiser, Director of Consulting at Zweig Group. We've come up with a range of simple ideas and themes to help you make sense of the numbers, whether you are working on scope issues, how to combat WIP, or you just want to know how to negotiate a good fee. I know I certainly do. You're watching the right video. This is the second of 3 videos that you can watch on financial management for the design industry. Hey, Robert and Claire, thanks for joining us today.
Good morning, Randy. How you doing?
Good. Glad to see you guys again. So we spent some time in the past talking about the main methods of accounting, internal financial reporting, open book management, and accounting metrics that project managers ought to know. Now, let's walk step by step through some simple ways to determine fees for projects and deal with the dreaded issue of scope creep that our audience of engineers and architects can sink their teeth into. How's that sound?
Great.
Good. So I know when it comes to dealing with fee rates and fee structures, there are a number of different ways to represent the fee in the contract. What else should a PM be thinking about as they work with the client? How about the client budgets and payment terms? When is it appropriate to talk about these things with a client?
Sure, and even before you're with the client, internally just thinking about, what is the fee? What goes into the fee? So there's really 4 things. It's your direct labor, it's your indirect labor, it's your overhead, and then it's the profit that you're going to build in. So that's really what you should be thinking about when it comes to the fees. I think as a project manager, and especially a new project manager, you tend to think about the direct labor and then the profit.
Right.
There's more that needs to go into that rate in order for it to be a successful project.
Okay.
And I think people also forget the treasure trove of data that they have. They don't go back and look at their timesheets and see what they actually charged to the project, see what it actually took to get the job done. And breaking it down stage by stage too. If we are consistently, going over budget on a specific phase of a project, maybe it's a training issue. Maybe your people need more investment in them to get through it faster, or maybe we're not putting enough hours in that part of the project. I think there's a lot of information that going back historically and seeing how we did on similar projects can really tell us.
Yeah, and that seems like to be a problem that a lot of firms struggle with is accounting for that time properly from project to project. Do you see that a lot?
Yeah, I think so. And knowing when to put your time to one project versus another can be really hard. And also, especially as a project manager or a leader, when you're reviewing somebody else's work.
Yeah.
So they did the work and you're reviewing it. Should you put your hours towards that? Project managers have a bit of a conflicting motivation because they also want their projects to look profitable.
Yeah.
But if we're not putting in the time for that review and we're consistently going back and having to do that, we're not going to get the right fee anyway.
Okay.
We need to make sure that we're building in time to do the things that we have to do.
Okay. All right.
Another thing that me and Claire were just talking about yesterday was how not often company or businesses update their fee rates.
That's true.
Especially regarding projects that last longer than a year, maybe 2 or 3 years, and they're using rates that are current rates rather than rates that may be
dated.
They're using dated rates for a future project.
Yeah.
And so that's something that
Yeah,
they could
absolutely.
think about a little bit more.
So a rule of thumb might be that they would go back and revisit their fee structure at least annually or maybe twice a year, or?
I think most firms do this about once a year.
Okay.
But I think that what Robert is saying is great, because if you do this once a year and you're in month 11, you're proposing on a project that's going to take a couple of years, unless you plan on keeping everybody's salaries the same.
Right.
You know,
Right.
you're going to be losing money there. So just thinking about like that, the backward, but also the forward looking too, with that rate sheet.
Yeah, and I guess how would someone articulate that to the client so that the client understands that, hey, this is, you know, we're charging you rates that are for now and in the future based on the length of this project. Is there anything specific that is that more negotiation, or, you know, what if clients push back on that?
Yeah, I think it's really education. I think it's
Okay.
telling them that we want to be your, you know, provider of the best quality service, and in order for us to do that, you know, here are the rates that we're comfortable committing to. This is it. This is all. You're not going to get, you know, nickel and dimed on change orders from us as a result of this. You know, we're
Right.
not going to be looking for extra things we can do to make up for the fact that we didn't get the fee right in the first place. We're going to go in eyes wide open. Here's the fee, and here's what it consists of, broken down by the rate.
Okay. All right. Cool. So I think that's really helpful. And, you know, given that, you know, there's so much that goes into the fee structure, and it really just depends on the organization, the type of discipline that a firm is operating from, and what they do: landscape architecture, civil engineering, mechanical, electrical, plumbing. Each of these different types of design firms do things a little differently. So you can't throw everybody into the same basket from that perspective. Right. But I think there's just some fundamental good practices from a fee structure basis that everybody can employ to be successful. Would you guys agree with that?
Absolutely.
Okay. All right, cool. So, you know, we've talked about fee structure a little bit and the many factors that have to be considered in this part of the process. But, you know, Robert, I want to bring you in here for a minute just to discuss scope creep. And I use air quotes there because scope creep is the issue that everybody brings up. We do a lot of project management training around the country, and it's the number one issue that people complain about is how do we overcome this, you know, this issue of scope creep. And so, you know, I would love to just get your thoughts and feedback on that, and find out, maybe talk about some techniques to identify scope creep, first of all.
Yeah, absolutely. So we all know what scope is. Scope is kind of a project's parameters, the defined criteria for a project, and its set boundaries. And so what the job is and what it's not. And so kind of scope creep happens whenever the project gets going along and more things are needed that aren't really associated with the project, but you want to keep that client relationship going strong. And so you somewhat feel obligated to kind of do these extra things, and so there's more expenses that weren't really part of the project that kind of creep in, and those can just grow on top of each other as the project goes along, and project's over and you've got X amount of additional expenses that weren't even a part of the original project.
Right. And
so that's what kind of scope creep is. Jamie actually gave me a good example about a babysitting job she had. I'm not sure if it was in high school or in college. But
it doesn't matter.
It doesn't matter. Okay, but she
wasn't yesterday.
Yeah,
No.
it wasn't yesterday. But she was babysitting for this family, and the understanding was that she would babysit this kid, keep them safe, and just a pretty much general babysitting job. Little did she know that if the kid was asleep, she was supposed to be detailing the house,
yeah.
and that she wasn't going to get paid unless that was part of her job, which that was not communicated up front, and so that's a little bit of scope creep that came in on her project.
Yeah.
So that relationship did not last very long.
I can imagine.
It sounded
so.
like.
Joke's on them. Their clothes are all pink now.
Exactly.
And they
exactly.
need a babysitter.
Oh man, I love that. And actually, I'm glad you did that to simplify kind of what scope creep looks like, because sometimes I think project managers, they get so caught up in trying to please the client that they forget that they have a job to do. Yeah. They have to follow and adhere to certain parameters, because if they don't, then they're going to be out of kilter with everything else that's going on in their organization. And in most cases, you're going to blow the budget when you run into that issue. And especially that's the issue that a lot of firms deal with, that we run into. And so, we get an idea. We kind of know and understand that. Could you guys talk just a little bit to how you guys being Robert and Jamie Claire, would manage a client's expectations when it came to just the early stages of dealing with the scope creep issue so that it doesn't happen, or this is how we avoid it?
Yeah, the first step to prevention really is the contract. It's before we're even, at risk of creep. It's figuring out what the actual contract parameters are.
Right.
It's making sure that our project is tight and clearly defined.
Yeah.
Don't say some trees, say how many trees.
Right.
Put exact specific numbers whenever possible. As much definition as you can. Include things that are your core services, what has to be done for the project to be delivered,
Right.
and what are some additional things that may come up. Does this include 3 city council meetings? Does this include I don't know what it is,
Right.
marketing materials. What do you expect as a potential outcome that we'll cover, and then what's beyond that?
Right.
I think where we get into trouble is saying we'll do whatever it takes to deliver, and then defining the end project, but we're not talking about whatever it takes to deliver.
Right.
And we
Right.
should be able to. We should be able to look at our data and understand what we've been expected to do on similar jobs for similar clients. So to me, part one is a very clear scope that uses numbers, hours, expectations, the core services, expanding beyond that to the other things that we will do because we're your partner in this, and then talking about that internally with the entire project team, so that we're all on the same page from the start, so that everybody who's going to touch the project knows what we've committed to,
Right.
and then they can start identifying things that might be beyond that. So it's internal, and then having the same discussion on the client side too.
Yeah. And then also kind of having mini milestones along with the project kind of helps you keep the scope to like a certain, it's periodic. So you've got first milestone and you've got scope related to that, rather than the whole project scope that can kind of complicate and get mixed up in the
different stages.
of the project.
Yes, and another mistake too that goes along with that is the project manager keeps the scope close to themselves. They see their job as managing the scope.
It's a secret.
And then and it's not even a secret. It's that they're pulling people in for specific pieces.
Right.
But the person who's being pulled in on a specific piece doesn't know what the bigger picture is.
Exactly.
So that totally gets rid of their ability to be proactive and to say, hey, just reading the scope, we're doing this thing over here, but we haven't even touched this phase yet.
Yeah.
The project manager thinks that's their job, but I think everybody in the company wants to be part of a successful project. Even if you're just being pulled in on something that seems like a minor detail,
Right.
I think making the entire team aware for whatever their piece is of how that fits into the bigger picture is a huge way to do that for the defined deliverables at each stage.
And I think some of that, just exactly what you just described, boils down to communication. I mean, total communication. I mean, Mark Zweig and I talked about that in a project management training that we did a while back for ZLearning. But that communication is critical, and project managers need to communicate early and often with all team members, not just with different parts of the team,
Yes.
unequally, meaning
Yes.
that, I'm telling Bob one thing and Sarah something else. Bob and Sarah kind of need to know all the information so they can kind of figure it out from there. And have a better understanding of where this thing is going. Plus, Bob and Sarah may save your bacon if you run into a problem and you overlook something from a project manager standpoint,
Right.
that somebody else that's in the trenches says,
Yeah.
wait, we can't do it this way. Or the scope says that we're only to visit them once a month, but they want us
Right.
out there twice a week. That's an issue,
Yes.
right? And that costs money.
Yes.
So that's how this happens, and that's why communication is so important.
Communication and then follow-ups as
Yeah.
well throughout the project to make sure that common understanding is still in place among your company's different divisions, as well as you and the clients understanding.
And across the different divisions is a really good point too that I don't want to get lost. The project description needs to be consistent across everybody who's going to see it. So we're talking about the project side, and the group that we're leaving out here is marketing. The
Right.
people who are putting our proposals together have got to we all have to be using the same language to describe the project, to describe our expertise, and to describe what we're going to do. It's so easy to blow the scope inadvertently when marketing is using a prior proposal and hasn't been privy to the conversations we're having, or vice versa.
Right.
We're not
Right.
giving them the information that they need on this specific job. So it's actually not just the project team, it's bigger than that.
Yeah.
It's the whole group that's going to be involved in making sure this project is delivered successfully.
Yeah, I think one of the words that it comes to my mind when as you just described that is a uniformity.
Yes.
That a
Yes.
firm should have, so that
Absolutely.
the right hand knows what the left hand is doing. Everybody's in complete agreement.
Yeah.
We're using the same language. all of that. Otherwise, you run into problems. And if somebody's over here doing one thing on a project and somebody's over there doing something else on a project,
Yes.
and they look totally different, well, then you have an expectation problem with your client.
You also have a brand risk too.
Yeah.
You know, if we're delivering things differently than it says we will, or if project manager to project manager is doing things their own way, we're really undermining the company's product. You know,
Right.
what does this company deliver?
Yeah, it's tough. There's so many moving parts. I tell you, it really is.
It really is what you said though, that it's communication. It's we forget to, we feel like we should tell people. Don't tell people anything, read it.
Yeah,
you know,
exactly.
I'm not the guardian of the information.
Right,
And
right.
that really is a big mistake I think that people make.
Okay, so now that we know what scope creep is and how it sometimes occurs, Robert, let's discuss ways to correct scope creep. I know we've talked about a couple of different things, but I want you to identify for the viewing audience just from point A to point B. These are some ways that you can deal with and correct scope creep.
Yeah, absolutely. And one of the main things to recognize is that you're not going to fully eliminate scope creep. And so that's one thing you should understand from the beginning. And so you need to plan for a little bit of scope creep to be a part of the project, and just expect for a little bit to happen.
Sure.
And so, like we mentioned earlier, it's just planning for this and communicating, or not necessarily communicating that aspect, but just planning for that scope creep.
Yeah.
And then next, you're going to want to have kind of major and minor milestones going through the project. I know we mentioned that earlier.
Yep.
Usually, kind of want to have a month-by-month milestone, or just a milestone for each month that kind of keeps you on schedule and moving forward with the project and its deliverables.
Okay. And what about change orders that come up? I mean, should you have a special form for that? Or, is that the kind of thing where you want to let the client know up front, if we have to make some changes, this is the form that we're going to use. We want everybody to sign off on it, and then we'll move forward to adhere to those changes.
I'm not sure if having kind of a set form for that is more, or just more so having, because it'll be a case by case based on what's needed. And so I may throw that one onto Jamie, Claire, as far as kind of understanding the different changes that are going to come along with projects.
Yeah, so as far as change orders go, that there's some firms that will not ever submit a change form. They believe that that's kind of on them.
Yeah.
If they scoped it wrong, they're not going to go back and issue any change orders. A lot of it again has to go back to the contract.
Yeah.
What does it say that we will do? What have we defined the scope clearly? If there is ambiguity, are we going to take that risk, or is the client? Is this foreseeable ambiguity?
Right.
I think that how you deal with change orders is a cultural thing more than anything else.
Yeah.
What do we do when there is a change? What's our communication like with the client? Do they understand that this is a change? Mm-hmm. Again, communication. That's really what it is. Are we putting the scope in front of the client often enough that they realize that we have changed directions and that a change order would be expected in order for us to now deliver the project that we've committed to delivering? Has it changed fundamentally enough? So I think it is more of a culture of communication than anything else, and your firm's approach to it.
Yeah.
I do think that we can't be afraid to submit change orders when we need to.
Right.
I think if we are making those changes, we have to keep that scope in mind close enough and not say, well, I don't want to make them mad.
Yeah.
Your client's going to be mad if the project isn't done right.
Right.
That's what's going to make your client really, really mad.
Yeah.
That's it.
Yeah.
If the project's going off kilter and we have made those changes, our time is valuable, and we've got to start thinking of it that way in this industry, and that those changes add up, and we can't be serving other clients while we're working on this project that may have changed fundamentally.
Yeah. And I know a lot of times, especially, it's you have to be nice, but people, especially in this industry, are really nice.
Yeah.
They tend to be really nice, and I think it's a double-edged sword. It sometimes benefits them, but then sometimes people will take advantage of you because of your desire to be so nice.
Well, and desire to be seen by the client as a right-hand person.
Right.
You don't want especially as a newer project manager, but at any level, it doesn't ever change. You want to be indispensable to your client.
Yeah.
And if you think you're doing something that's going to annoy your client or make them not pick up the phone and call you next time, you're not going to do it.
Right.
And I think that it is, again, part of your culture as a company to say, our time is valuable. Don't confuse going above and beyond and delivering exceptional client service with being walked all over.
Right.
Find that line, and it's not something you can put in a policy.
Yeah.
It really isn't.
No.
It's training and getting more confident in yourself as a project manager.
Yeah, and especially, I mean, you project managers that are watching this, I mean, you guys are the front line of your organization, and I think it's important for you to hold the line when and where possible. So, because I mean, without that, then it ruins your firm's reputation.
Right.
And so there's just so many factors that go into it, and I recognize that these guys have a very hard job on a regular basis. I can't even imagine. I mean, we have challenges ourselves at Zweig Group, and it just, scope creep is a major issue. So, certainly, we'll talk more about that in future videos, and especially how it relates to from a financial perspective. I want to get back to another term that I wanted to talk about, and it's one that we kind of have fun with all the time. And whenever I bring up this term, I always think of the group Devo, and that's a whole different story. But let's talk about WIP, or work in process. Robert, can you tell me what that is specifically, and why every firm should know this number as it relates to their company?
Yeah, so work in process is essentially the work that's billable but has not been billed yet. Mm-hmm. So it's about to be in your accounts receivable, but it hasn't been billed yet.
Okay.
And so it could be considered just pre-AR,
okay,
pre-accounts receivable.
Yeah. I know some people have a hard time understanding that concept because it's not quite there yet, and you can't really use WIP beneficially from an AR perspective when it comes to maybe getting additional credit and things of that nature. Is that correct, Amy Claire?
Probably.
Probably. Okay.
I think it would probably depend on your bank, but I would be surprised if they would lend on it.
On that, right? Because they would lend on AR, but not on probably not on WIP. Maybe.
Yeah. I'm not sure about that.
Okay. All right. That's fine. So, so tell me a little bit more about WIP. I know, Jamie Claire, you're kind of passionate about WIP, and I know is such a thing as good WIP. Can you elaborate on that at all?
Sure, yeah, absolutely. So WIP is an asset. It is a good thing to have. Every company has WIP every time they do any work before that work has been billed. So it is a very good thing to have, and it is a fundamental. I think that there are a few challenges we see. First of all, many companies don't have software that will let them track WIP, so it is lost as an asset on your balance sheet, which impacts a lot of things, probably your valuation formula internally, how you look to banks and outsiders, and insiders too, if you're going to trade stock internally. So leaving off an asset is never a good thing. Just forgetting it's there. It's not forgetting it's there. It's most software that isn't industry specific won't let you capture it adequately.
But Deltek's other software programs like that, they allow you to track that, right?
Yes, and and I'm not sure if project management specific software also allows you to track it. I would imagine it might, more robust project management software, but if you're using QuickBooks, that it's not really set up to track that traditionally. Because your timesheet isn't usually fully integrated. So
that's true. Okay, so there is good WIP, but you have to be able to track it to make sense.
To be able to quantify it, and that's why most firms leave it off their balance sheet, is because they can't really track it. So WIP is just what is there before it has gone out in the form of an invoice.
Right.
So obviously it's the lag between getting the invoice, doing the work, and getting the invoice out the door.
Okay. So what about bad WIP?
Sure. So to define good WIP a little more clearly, it's generally characterized by WIP that has accrued after the last billing cycle has ended.
Okay.
So that's how you usually, that pretty much always is going to be good WIP.
So that would basically be, so if the billing cycle was the 30th of last month and it's the 8th of this month,
yes,
then all the work that I've done from the 1st to the 8th is...
It's more likely to be good WIP than work that was done before the 30th. So if you've got stuff that's sitting in WIP and it was done months ago and it just hasn't gone out yet, that's a pretty big red flag that you may got some bad WIP on your hands.
Right. You don't want to have bad WIP on your hands.
60 days or under is usually about kind of one of the other standards that you would see. But then also if the value of that WIP is under the contract amount for that phase or that next billing installment. Those are kind of some ways to tell if you have good WIP or bad WIP. So bad WIP is older.
Right.
It could have been invoiced earlier based on when it was completed in the project phase that we were in at that time, but for whatever reason it hasn't been. Okay. So if you're a manager and you're looking at a WIP aging report and you can see that there's something sitting there from phase 1 that we haven't invoiced out yet, why is that sitting there? That's the follow-up question. What is that? What am I looking at? You
Okay.
know, are people camping out on this job and just putting hours on it that we're not going to bill? You know, there's a story there. We just need to figure out what it is.
Okay. Okay. Well, that makes sense. And then, so I guess the idea is that everybody should keep an eye on WIP and have a better understanding of what it looks like for your particular firm. And I think you probably see a pattern with different types of firms and the type of work that they do and the type of WIP that they will have, right? And I know, and according to a couple of our different surveys, I think the average number of days of WIP is about 17 or somewhere thereabouts. Does that sound about right?
I think yes, which is actually up. It was 14.
It was 14
the
yes.
prior year. So what that would mean, that's how many days in WIP we have on hand. So you can make that number shorter by invoicing faster.
Right.
However, you can invoice continuously, but if your contract says we will only invoice you on this date and this date of every month, it doesn't matter. You know, you just need to make sure that you're getting that invoice in before that cutoff time.
Yeah.
But yeah, that's a really important point too. So there's AR, which is 70 something days in this industry, and then there's the days we have tied up in WIP, which is another 2-3 weeks plus in there. And when we're only thinking about it only as the 70 something days from doing the work until getting paid, we're actually forgetting that day's WIP period adds pretty heavily to that figure.
It does, and I think the industry figures for us this year are 77 days on AR, and then you take that 17 days of WIP, you add those two together, you get 94 days.
It's a lot.
Yeah, it is a lot. That's a lot. That's basically 3 months without getting paid.
Yes.
Okay.
So if you can invoice faster, great.
Yeah.
It's all governed by the contract, though. So if
Yeah.
you've already committed to something different, then you're kind of stuck with that. Which is fine.
Yeah, and I understand. I mean, there's some people watching this that are saying, but Randy and Jamie and Robert, you guys don't understand. I'm dealing with government contracts.
Right,
I can
of
only
course,
bill.
yeah.
I mean, we understand that. But when and where possible, don't default to a standard of your hardest to get paid contract with everybody else that you work with as a client.
Yes, yeah, absolutely. We throw our hands up so quickly in this industry, and it's crazy too.
Yeah.
And we also treat approving invoices. Project managers treat approving invoices like the absolute worst thing that they have to do. And it's like, but that's how you get paid. I know it's a pain, but as a project manager, you need to manage it.
Exactly.
And whatever you can do internally to review invoices faster, to get them approved, turn back over to accounting, that's something that your team should be talking about more. Who's getting their invoices approved internally faster.
Yeah.
Very important.
Should be a race to the top, not a race to the bottom. So, see who can get their money back faster. So, well, that's good. I think that could be helpful for those that are watching it. So much great information here. I'm actually really glad that we're taking the time to record this. So that I can go over it later and study this subject further. Robert and Jamie, you guys have given us a ton to think about as we continue to develop our financial and accounting skills. I'm sure there are a lot of project managers out there that appreciate this information. Do you guys have any final thoughts to share before we close out this ZLearning session?
I think it's good preparation for the part 3 as we go into cash flow and discuss that a little more, because we kind of finish up with AR and WIP and then we'll next talk about cash flow, and that'll be a fun little topic.
Yeah, no, I think so. How about you, Jamie, Claire? Do you have anything?
So I would say if you're not already in your reporting cycle, including a WIP aging report, I would say to go ahead and do that if your accounting software allows. That should be part of your kind of standard reporting package internally, broken down by project. I think is an extremely important thing to do. Also, project manager can be helpful to see too. The other thing I would say is to be really proactive about writing WIP off. We're talking about being proactive about getting invoices out the door. I would also say if we have, hours sitting there in our WIP that we know we're not going to bill, get that cleaned up sooner rather than later. It's not going to go away, until you take that proactive step of writing it off. So communicate that internally and keep that clean, so you don't have really old, huge funds sitting there that we're never going to be able to recognize as revenue anyway.
Right.
So just be proactive about this. Accounting's going to find out.
Right, they will. They definitely will find out. And you bring up a good point. Why don't we just talk before we close this out? Talk about the relationship between project managers and accounting, and that they're not just order takers and they actually can save your bacon in a lot of instances in terms of keeping on top of things. How do you formulate, or how do you develop a really good positive working relationship with the accounting department? And Robert, maybe you want to answer that question.
I usually have a good relationship with everyone, so.
Cupcakes, or
Exactly. Okay, so
everyone loves the accounting department. What are you talking about?
Yeah, right. I know. That's on payday, right?
Yeah.
That's when that happens. So
no, but I guess me and Jamie were talking about it earlier this week on how rather than kind of the two project managers for you and your client kind of working out the accounting issues and like, hey, we haven't gotten paid yet, what's going on? That's a job for the accounting department to do, because you don't want the money to get involved with you and your clients, the two project managers relationship, because that's gonna kind of hinder that in a negative way, and that's not your job. That's why we have the accounting division to kind of do work with collections and manage that part of the equation.
Okay, yeah, and we're going to talk a bit more about collections in another video, so that definitely is fine. I just think it's important, and we talk about, project managers have stakeholders that they deal with externally, but also internally. And I think the accounting department is one of those internal stakeholders that a project manager needs to have curry favor with and have a good relationship with. I think it can really help them out in the long term. So, and I'm sure you guys both agree with that.
It's a big mistake to think that when you get an email from accounting, it's going to slow you down from doing your job. There are people that we talk to in project management roles that feel like accounting is demanding of their time.
Yeah.
Accounting's goal is to get this company paid.
Right.
We are working on the same team. That we just have to make sure that we're communicating with those internal stakeholders and seeing what they contribute to the success of the project, the division, the company overall too. It's not a thorn in the side to respond to accounting. It's really important to us.
Yeah.
And then just one more thing, sure. I guess going back to the importance in just understanding of scope creep and realize that it will happen, but you don't have to be the quote unquote nice guy with every one of your clients and do every little thing for them, even though you may feel obligated to because they are your client. The thing that's going to kind of take the place of that is the communication and mutual understanding that you have with your client in the project and the process and the different goals throughout the project. So got to remember that communication, understanding from beginning to milestone to end.
I want to thank you for watching this ZLearning episode on how you can be a better financial manager, part 2. Stay tuned for part 3, managing cash flow and proactive financial management. Remember, in order to get continuing education credit, you must follow the instructions in the email that came along with this video, complete a short quiz, and a certificate will be provided to you immediately. If you'd like to share this video with your office in a lunch and learn format, you can do so easily. You only need to purchase additional quizzes for the number of people that watch the video and want to get their continuing education credit. I urge you to do it. It's a very cost-effective way to get some additional CEUs. Check your email when you order this video for additional information. You can always email us here at elearning@zweiggroup.com if you have any questions. Please email us with any feedback or thoughts too. We love feedback, and we especially love to hear from anyone that was impacted in a positive way by this video training. Stay tuned for our next ZLearning class coming soon. Whether you're looking for online continuing education classes in project management, business development, marketing, leadership, or financial management for AEC professionals, ZLearning has got you covered. Zweig Group's ZLearning offers fresh and relevant content that won't put you to sleep. Visit us at zweiggroup.com/ZLearning for more information. Until the next CEU, we'll see you later.